So breaking down from the weekly to the daily chart here, you can see, it was pretty much just one-way direction on gold last year. Like I said, one of the things with my trading system is that when something breaks to a new high, I like to buy it. When something breaks to a new low, I like to sell it. What you want to do, and I mean, these round numbers especially are very important, that 3,000 level. These round numbers are important because markets will tend to touch the level, break slightly above the level, then come back slightly and then continue up. It's around the psychology of the way that players place orders. When something hits a new historical high, there generally isn't any offers above it. If people are long and a market goes up, they're not really looking to sell it. They're looking to add to the long. So when a market touches those sort of round number important key levels, you won't really see a lot of selling come in. That's why it's important to trade these impulsive markets in a different way than you may normally trade them. Generally speaking, and I mean, the guys on the floor here will tell you that I'm always screaming that whenever something hits a new high, you buy it. Whenever something hits a new low, you sell it. So for these markets, what we want to do is we want to trade the very small consolidation back up right after the new high or new low. So what will happen is, and it always happens in Asia, right? So the market will hit its new high or new low in New York or London, and then we come into Asia, and Asia kind of just sits there. That's when you want to get into the move. Asia is a good time to do that because there's decent liquidity, but it's not very directional, especially on something like gold, which is only really traded out of Hong Kong in Southeast Asia. We want to keep really wide stops on these moves just because, the trend remains. You don't want to get stopped out of a long-term trade just because you place your stops too tight. Next week, I might do the technical just about stops because I think that a lot of people really do place them incorrectly, and especially moving them. Don't move them. And I mean, point 3 for me, and this is the most important one, don't fade the trend. If the market's going up, don't sell it. I mean, it really is as simple as that. I had a client years ago say to me that she sells it when it gets to the top of the chart and buys it when it gets to the bottom of the chart. And I'm like, well, you know what? Charts adjust themselves. Markets can go haywire. We had, I think, 26 or 27% up on gold last year. It was about the same the year before. So really, it's up about 50% in the last 2 years. Doesn't look like it's going to change anytime soon. And then you look at it from the fundamental perspective, there's no real reason not to have buying of safe haven assets at the moment. We've got a bit of a loose cannon as the US president. We've got wars in Ukraine and the US and Russia. We've got wars in the Middle East. That war's pretty much been going on since Jesus was a boy.